Squawk on the Street in the first edition of the Santelli Exchange. Of course, Monday, the first day of a shortened trading week. There has been ongoing a huge amount of dialogue, discourse, as to what is the U.S. Treasury market, and indeed the global sovereign debt market telling us, whether it's bond yields, gilt yields, even JGB, Japanese government bond yields, Treasury yields. They certainly don't seem to be sending the message that we've all been taught, that when horsepower increases in an economy, its interest rates move higher. And we understand there's a lot of crosswinds with the Federal Reserve, but in the end, I think the answer is pretty obvious. I think when you have a carving knife and you're trying to cover up smaller and smaller slices into more and more pieces to try to help large swaths of the U.S. economy, participants and citizens in the U.S. that just don't feel as though they're being included in what has been a historic run since March of '09 in stocks. The government is the problem. Yes, that's what I'm saying, and I know there's boatloads of politicians out there that just don't agree with it. And you could look at many of them. We have Barney Frank. He's on our channel now as a contributor. You know, whenever you say that the government's the problem, you hear a lot of squawking. But in the end, there's a lot of money on the sidelines. There's a lot of income tax revenue that has come in, but it just still doesn't seem to do the magic it once did. Why? Because at the end of all those dollars are investors that need to direct those dollars, and they just feel as though there's a hand that's there that's always pushing the equation, whether it's in college and education. Think about student loans and debt and how freely we'll give anybody credit whether they can pay it back or not. The lack of true reforms in income tax, immigration, and especially government-sponsored enterprises. After the crisis, Uncle Sam squatted in everybody's living room and he refuses to leave. Now, you saw it show up today. We saw business inventories. It was a pretty decent number. And we all understand there may be some comeback to the inventory bill that we saw at the end of last year from the respective weather and demand. But the inventory to sales ratio, 2 months running at 131, basically puts it at the highest level since October of '09. And remember, if you want the economy to hum along, you want the sales part, the denominator, to get big. You want this fraction to get small. You don't want it hovering at the highest level since October of '09. Kayla, back to you.